The world of finance operates on intricate balances, underpinned by trust in monetary systems. However, history reveals that no fiat currency remains infallible forever. As global economic pressures mount, the possibility of a collapse of the US dollar looms closer, potentially triggering a significant financial crisis. The need for preparation is urgent, particularly in terms of securing gold and silver as essential tools for surviving and thriving in the aftermath. Let us delve deeply into the key aspects of this potential crisis, examining the role of precious metals, historical precedents, and the inevitable consequences of unsustainable monetary policies. The potential collapse of the US dollar is not a far-off fantasy. Economic indicators and historical patterns suggest that this event could occur at any moment, possibly even this year. This looming crisis underscores the need for proactive preparation. Individuals must consider how to preserve their wealth and ensure access to essential goods and services in the immediate aftermath of such a catastrophic event. The collapse of a major currency like the dollar would result in widespread economic disarray, disrupting supply chains, banking systems, and global trade. The chaos would lead to a rapid loss of confidence in fiat currencies, forcing people to seek alternatives for transactions and savings. For those who have prepared by holding tangible assets such as gold and silver, survival and even prosperity in this scenario become far more feasible. Gold and silver have long been recognized as the ultimate safe havens during financial crises. Unlike fiat currencies, which can be printed in unlimited quantities, gold and silver derive their value from scarcity, intrinsic worth, and historical acceptance as money. The demand for precious metals can be classified into two categories: investment demand and monetary demand. Investment demand is driven by individuals and institutions purchasing gold and silver as stores of value, anticipating future price appreciation or as a hedge against inflation. Monetary demand, on the other hand, arises when gold and silver are actively used as mediums of exchange during a breakdown of the existing monetary system. This scenario occurs when fiat currencies lose their utility due to hyperinflation, lack of trust, or collapse. Historically, periods of monetary demand have coincided with dramatic increases in the value of gold and silver. Silver plays a unique role during monetary crises, often outperforming gold due to its affordability and accessibility. During times of economic upheaval, the gold-to-silver ratio, a measure of how many ounces of silver it takes to purchase an ounce of gold, tends to fall dramatically. 1918, in the aftermath of World War I, the gold-to-silver ratio fell to 15:1, reflecting a surge in demand for silver as a monetary asset. 1980, during a period of soaring inflation and economic instability, the ratio again plummeted to 15:1. These historical trends highlight a pattern: when gold becomes unattainable for the average person, silver emerges as the preferred alternative. This shift in demand underscores the importance of holding silver in addition to gold as part of a preparedness strategy. The rising prices we observe today are a symptom of a deeper issue: a flawed monetary system. Contrary to popular belief, inflation is not fundamentally a problem of goods shortages, but rather a money problem. In hyperinflationary environments, the cost of basic necessities such as food, energy, and housing rises much faster than luxury goods. This phenomenon occurs because essential items are in constant demand, while discretionary spending declines as individuals prioritize survival. The accelerating cost of necessities creates a feedback loop, further eroding the purchasing power of fiat currencies. In such a scenario, gold and silver provide a critical lifeline, retaining their value while fiat currencies fail. Central banks play a pivotal role in shaping monetary policy and, by extension, the stability of fiat currencies. Recent years have seen unprecedented money printing and quantitative easing, leading to inflationary pressures worldwide. While central banks, including the Federal Reserve, have attempted to tighten monetary policy by reducing money supply and raising interest rates, history suggests that these measures are temporary. Under pressure from economic contraction, rising unemployment, or political fallout, central banks invariably reverse course and resume printing money. When this reversal occurs, it triggers a renewed surge in demand for precious metals. Investors flock to gold and silver as safe havens, driving up prices and depleting centralized stockpiles like those held by the COMEX and the LBMA. The physical supply of silver is limited, and centralized stockpiles are already under strain. The depletion of these reserves could precipitate a crisis in the silver market, where demand outstrips supply. An example of this vulnerability occurred in July 2020, when the number of silver delivery requests on the COMEX exceeded the available registered supply. To address the shortfall, institutions like JP Morgan moved large quantities of silver from eligible to registered categories. This event illustrates the fragility of the silver market and the potential for a supply crisis if demand surges suddenly. As centralized stockpiles are exhausted, the market would shift to physical exchanges, where prices are dictated by real-world supply and demand rather than paper contracts. Throughout history, gold and silver have proven to be the only lasting forms of money. Attempts to use alternative commodities or fiat schemes have consistently failed due to lack of durability, divisibility, or universal acceptance. Commodity schemes' efforts to use items like real estate or tobacco as money have been short-lived, lacking the stability and trust inherent in gold and silver. Gold and silver standards periods of economic stability and growth have often coincided with gold and silver-backed monetary systems, underscoring their effectiveness as money. As fiat currencies falter, the world will inevitably return to gold and silver as the ultimate stores of value and mediums of exchange. The BRICS nations Brazil, Russia, India, China, and South Africa have explored alternatives to the US dollar, including the possibility of a gold or silver-backed currency. However, these efforts are hindered by a lack of fiscal responsibility and cohesive leadership among member states. Rather than proactively leading a monetary revolution, BRICS countries are more likely to follow public demand. As citizens worldwide turn to gold and silver in the face of a dollar collapse, BRICS nations may adopt similar measures, taking credit for a trend they did not initiate. Inflationary systems are inherently exponential, following a pattern of gradual growth before accelerating into a vertical surge. The Federal Reserve's current attempts to halt inflation by reducing money supply are unlikely to succeed in the long term. Temporary measures, every historical attempt to stop inflation through monetary tightening has ultimately failed, leading to a reversal and renewed money printing. Self-annihilation of systems, unsustainable monetary policies inevitably lead to their own collapse, a process driven by greed and systemic flaws. The current trajectory suggests that the collapse of the dollar and the subsequent return to gold and silver as money are not just possible but inevitable. The potential collapse of the dollar and the ensuing monetary crisis highlight the importance of preparation and the enduring value of gold and silver. By understanding the dynamics of investment and monetary demand, the historical performance of silver, and the actions of central banks, individuals can position themselves to weather the storm. In a world where fiat currencies are increasingly vulnerable, gold and silver stand as timeless pillars of stability. Their role as money, proven over centuries, will once again come to the forefront as the foundation of a post-collapse monetary system. Be prepared and hold these precious metals wherever you need them to secure your future in an uncertain world.